Ladies and gentlemen, good day and welcome to Tara Chand Infralogistic Solutions Limited Q4 and FY24 conference call. As a reminder, all participant lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Mehta from Stellar IR Advisors Private Limited. Thank you and over to you, sir.
Thank you, Ria. Good evening, everyone. I, on behalf of Stellar Investor Relations, welcome you all to Tara Chand Infralogistic Solutions Limited Q4 and FY24 earnings conference call. We shall be sharing the key operating and financial highlight for the fourth quarter and full year ended March 31, 2024. We have with us today the senior management team of Tara Chand Infralogistic Solutions Limited, Mr. Himanshu Agarwal, Full-Time Director and CFO. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Documents relating to the company's financial performance, including the investor presentation, have already been uploaded on the stock exchanges and the company's website. I now invite Mr. Himanshu Agarwal to share his initial remarks on the company's performance for the quarter and full year, and then we will open the floor for Q&A. Thank you and over to you, sir.
Thank you for the introduction, Vishal. Good afternoon, ladies and gentlemen. I, Himanshu Agarwal, the Whole-Time Director and CFO of Tara Chand Infralogistic Solutions Limited, welcome you and thank you for being a part of the earnings call for Q4 and FY ended 31st March 24. At the outset, it gives me immense pleasure in announcing that the company has migrated to the NSE main board from the NSE emerge on 16th of April 2024. Given that this is our first call post our migration to the main board, I understand that some of you might be new to our company. So to start with, I would like to give you a brief about what our company does. Our company operates across the length and breadth of India through its three key segments or verticals. Segment A, equipment rentals and infrastructure works. Segment B, warehousing, handling and transportation. And segment C, steel processing and distribution. In our warehousing, handling and transportation segment, we are into warehousing and logistics solutions specifically for steel products that we execute primarily for PSU companies like Steel Authority of India Limited and Rashtriya Ispat Nigam Limited, more famously known as Vizag Steel. The company has a vast experience of more than 4 decades for steel handling projects where we are involved with handling of more than 10 million tons of steel per annum at warehouses either owned by the primary client or owned by us. In our equipment rental segment, the company has about 300 machines which comprise heavy-duty cranes, piling rigs and man lifts. The largest crane the company has is of 800-ton capacity. There are hydraulic piling rigs which are used for earthwork or groundwork to be done for civil construction works, while the man lifts or aerial working platforms are used to work at heights of 40 meters and above. In addition to this, the company also has road equipment and steel processing equipment for processing of TMT bars which are used again in construction activity. The company in the infra space has been active in the construction of large metros in the metro rail network which is spread across the country now. The company has participated in Mumbai, Bangalore, Ahmedabad, Surat, Indore, Pune, Chennai and many more metro construction works till date and is still actively working in many metro projects under construction. We have played a very important role for the construction of the first ever bullet train of the country, which is also known as the Mumbai-Ahmedabad High-Speed Rail Project. The company also provided equipment extensively for the construction of the Atal Setu in Mumbai. Apart from that, our company is into industrial capacity expansion projects where we are working actively with the cement industry, steel industry, petrochemical, refineries and the power sector as well. Now the company has concrete plans to enter the renewable energy sector in this financial year and anticipates that this sector will contribute about 5 to 6% of the total revenue for the company in FY25. We have a very diverse team of experts which are spread across 21 states in the country. Our ever-growing team now consists of 731 engineers, operators, riggers, and administrative team. The company is active at more than 50 working sites across the country and also has operations with L&T at Mauritius. With that, now I would like to take you through the financial performance of the company for the quarter 4 and the financial year ended 31st March 24. The key highlights of the period are as under. The company recorded its highest ever quarterly and yearly revenue and profitability in Q4 and FY24. It also had its highest ever debt repayment of rupees 38 crores in FY24, with now the debt equity standing at 0.9, the ratio at 0.9. The company's working capital cycle has also improved and receivable days have come down to 84 days. The company has an order book of 138.23 crores as of the 1st of May 2024, which is to be executed in the current FY. This year, we achieved significant milestones. Q4 revenue increased by 19% to 46.90 crores, and for the full year, a robust 21% growth totaling 174.86 crores. The EBITDA margins surged by 300 basis points to 33% for FY24, while our profit after tax soared by 141% in Q4 and 72% annually. All of this comparison is on a year-on-year basis. For the segment revenue mix, our equipment rental segment contributed 44% to the revenue while posting a very healthy EBITDA of 51%, which is a 1600 basis points Y-on-Y increase. The warehousing and transportation segment contributed 48% to the revenue with an EBITDA of about 23%, which saw a decline of 400 basis points year-on-year. The steel processing revenue share was 8%, which was down from 10% in the last financial year. In our equipment rental segment, the company has witnessed a surge in the average monthly yield, which was at about 2.85% for FY24. The company's order book has grown by 42% to 138.23 crores as against 97.49 crores as on 1st of May 2024. As already stated, this order book is for executing in the current FY up to 31st March 2025. Going forward, the company is actively working on entering into the renewable energy sector through its equipment rental division. Moreover, we are making positive strides towards our venture into specialized EPC projects in the civil and mechanical realms. The company has set an aggressive target of minimum 30% Y-on-Y growth for FY25 through our sustained efforts towards nation building. With that, I would like to now open up the floor for Q&A and hand it back to Vishal. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Swapnil Kabra from SK Enterprises. Please go ahead.
Hi, sir. Firstly, congratulations on a very good set of numbers. Sir, I just wanted to understand a bit on the rental yield. So what is the current rental yield that we are getting, and are we seeing any positive traction here?
Thank you, Mr. Kabra, for the congratulations and the question. So as I understand, you wish to understand the rental yield. So as I stated in my opening remarks, we have witnessed the rental yields on a monthly basis to reach 2.85% on an average for the FY24. And you had a second question which I didn't understand.
Yes, so are we seeing any positive traction? Is our yield increasing on quarter-on-quarter basis?
Yes. See, on an FY basis, definitely there has been an increase, and on a quarter-on-quarter basis, the yield is dependent again on the seasonality of our industry because the first 2 quarters tend to be slightly lower on the demand side, and then the demand suddenly picks up in the last 2 quarters post monsoons. So that does lead to a change in the quarter-on-quarter yield, but we do primarily a year-on-year comparison to get a better understanding.
Okay. And sir, as we have announced huge capex for the equipment rental business, what kind of demand are we witnessing there? And is this for any specific client?
So the demand is huge. We got across the sectors. So as we are working across the sectors of cement, steel, in the petrochemical sector, and now we've also entering the renewable energy sector. So there is sufficient demand to cater to our capex plans, which will again be done as it is a proposed capex plan. So it will be done based on once we have orders in place. No, it is not to any specific client. It will be spread across the sectors.
Okay. So just one last question, if you can squeeze in. How does the rental yield change over the course of asset life?
It will, Mr. Kabra, it depends actually on the demand because the asset yield, if you look at the depreciated value, the yield will be much higher. So in that sense, the yield can be seen as higher because the equipment usually depreciates over. These are large cranes, very sophisticated machines, which depreciate from 15 to 20 years. So they have a very good life with regards to being able to earn the yield. So that yield number, if you're calculating on the depreciating value, then the yields will definitely keep rising.
So actually, I wanted to understand the realization or the absolute number of the rent that you're fetching. Does it change if the asset gets old?
So, no, the rentals are predominantly similar. The only advantage once the equipment gets older is you have the bandwidth to be price competitive, if that is what you wish to know. But there is not much of a change. The only change, if you would see with regards to the rentals, is again totally dependent on the demand and supply. The aging factor does not lead to too much of a change, and the policy that our company follows, we also churn out equipment after 9 to 10 years of its age. So we make sure that we are not falling into a scenario where with too much of the equipment becoming older, leading to any lower rentals.
Thanks a lot, sir. Thanks a lot.
Thank you.
Thank you. Next question is from the line of Dolly Chaudhary from Niveshaay. Please go ahead.
Hello, sir. Thank you for the opportunity and congratulations on a great set of numbers. First of all, I wanted to understand the breakup of our order book of 138 crores segment-wise. And I also want to add a question that we also received order from sale of 110 crores, which is executed in 4.5 years. So how it is included in this order book position?
So thank you for the question, Ms. Dolly. Yes, the order book of 138 crores as on 1st of May 24, it includes the sale order that we had received, rather the sale contract that we received that was to start in May 2024 itself. So the order book definitely includes that. And with regards to the spread of the order book, it is about 70% of that order book is from our warehousing and transportation segment, because there we've got long-term contracts and hence it has a better clear visibility on the order book for the entire financial year. While for our equipment rental division, the order book is visible primarily more for 6 months to 1 year for certain equipment, but mostly 6 months and then the orders are usually extended by the client. So when we are talking about the order book right now, there you will see that it is primarily for highly percentage being for the warehouse transportation.
I'm sorry to interrupt, sir. We're not able to hear you.
Hello, can you hear me now?
Yes, sir.
Okay. So what I was saying is that the order book has a current visibility from the warehousing and transportation segment for 70%, and the rest of the order book is from our equipment and rental division.
So just a follow-up on that we have also mentioned that this 138 crores order book is executed up to 31st March 2025. And
That's
that even 10 crores order book is of 4.5 years. So have we adjusted for it?
Yes, ma'am. So out of the 110 crores, the portion that is executable in this financial year has been considered for this year, and the rest of the portions will be considered in the subsequent years. So the 138 crores does not include 100% of 110 crores, if that is the question that you asked, because we have other contracts which are already live with the SAIL and RINL and other transportation contracts, which also form a part of the 138 crores that is to be executed in this FY.
Okay. And next question would be that we have mentioned that we have handled total steel in FY23 around 95 lakh, if I'm not wrong. So what would be that number for FY24?
That number would be somewhere, we haven't got the numbers yet. I don't have the exact numbers. So it will be about close to about 11 lakhs in the FY24.
Okay. And I actually wanted to understand on the depreciation policy. Depreciation has fallen significantly for this quarter. So what would be the reason for it?
So certain equipment which are the larger crawler cranes, they have a life of 20 years, and as per the provisions in the Companies Act and whatever the guidance by our professional and statutory auditors, they have advised for wherever the necessary correction was required for the depreciation, that has been done, and that has come into effect for the last quarter.
So our depreciation policy has changed a little. That's what.
Not necessarily changed, but it is following the same policy wherein certain equipment which had a possibility or which are already allowed to be depreciated over a larger period of time or over a longer period of time, that has been taken into consideration.
Okay. So next question would be that we have mentioned for FY23, our lifting capacity was 2,245 metric tons. So what would be this number for 2024? Lifting capacity increase.
For 2024?
Yes.
So that number has already crossed, it was 24, just a second. Could you please repeat that?
It was 2,245 metric tons in FY 2023.
That has crossed about 2,600 metric tons.
And what will be our target after this CapEx is 160 crores? What will be our target for the tonnage capacity?
The tonnage capacity, we are because targeting the higher capacity machines, the tonnage capacity will increase drastically, but because of a certain business strategy, I will not be able to declare that as of today.
Okay. I wanted to understand one more thing, that we have our sector mix has changed significantly from FY23 to FY24 in favor of metals, cement and petrochemicals, and it has decreased for infrastructure. So I wanted to understand how it impacts our business in terms of maybe yields have increased or these are long-term contracts. So how it has impacted our business in terms of it?
So it has impacted us positively, as you can see in the numbers, wherein these capacity expansion projects that are there, these are which have helped us bring in better revenue and better profitability compared to the infra works. Also, up until last year, the company was involved in subcontracting works in the infra space that the company stopped doing post September 23, which has also led to the company venturing into other areas and expand its reach in the metals, cement and petrochemical sector.
So in terms of yield, it has not changed. It has changed because of these sectors.
Yes. That is why the yield has reached 2.85%.
Okay. And just about the capex, when can we expect it to get operationalized and until what year?
Yeah. So the capex is currently being planned out. We anticipate that this capex will be executed over this financial year and the next financial year, given what kind of orders we are able to fetch and the kind of visibility we see with our clients. And you will be able to then accordingly see it in the subsequent financial results.
And how are we planning to fund this capex?
So it will be a combination of debt and internal accruals. And because in our industry with the large machines, the capex is primarily done through internal accruals, and also there is a component of suppliers credit. So debt comes into the books at a later stage when the suppliers credit period is concluded or, the LC matures.
So currently we have approximately 85 crores of debt. So what figure can we expect going forward?
So the debt currently, if you would look at the secured term loans, is about 70 odd crores, and that is what will remain constant over the next few years, because as I said, there is a component of suppliers credit, so the debt will not be coming onto the books immediately, and it will only come in when the credit period matures. So which allows us time, which will enable us to pay back what we are already paying back. We're paying back almost about 30 crores on an average in a financial year. And last year we paid back more debt because there were higher internal accruals, and we also had some fundraise through the preferential allotments. So that enabled us to pay back 38 crores, and that is the target, that we keep paying back sufficiently while our debt remains constant within that stage, and we bring down our debt equity, which is at 0.9 right now. The target is to bring it down even further.
Okay, and just one more question, that our receivable days have been reduced significantly over the years. So what has been the reason for it?
The reason for it has been a combination of reasons. One, the revenue mix has changed. The infra space tends to have an elongated receivable cycle. Second, we've had more financial prudence come into play. And third, we did face a lot of challenges earlier because of the 2 years of COVID-induced challenges. So that has now weaned off, and we have become more prudent about what type of clientele we are working with, and the terms have become better. The revenue has been moved to the sectors where the receivables are much faster. So a combination of all of that has helped us.
And if I can add just one more question, that we have...
Could you please return to the question queue for follow-up questions, as there are several participants waiting for their turn?
Sure, I'll join it. Thank you.
Thank you.
Thank you.
Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your question to only 2 questions per participant. Next question is from the line of Bhavya Sonawala from Samsa Capital. Please go ahead.
Yeah, hi. Thank you for the opportunity, and congratulations on a great set of numbers. I have just 2 questions. The first question is, we have seen a shift from infra to metals and cement and petrochemicals, for that matter, in the equipment hiring space. How does the trend look, and can you give us some guidance on what do you think this will go ahead from our order book, and your view on how this is going to go ahead?
So thank you for the question. So the revenue mix would be similar to what you see as of now, as we have been able to distribute it in the anticipation of what we wanted to do over the last financial year. One change you would see, as I've mentioned in the opening remarks, is the renewable energy sector, which is currently missing. It's possible that it will be added to the revenue mix, and we might see some changes there. But more or less, the revenue mix that we have seen for the last financial year, and that is where we see going forward, where we see it going forward.
Okay, understood. My next question is on the renewable sector that you mentioned. Just wanted to know what kind of tonnage do we look at while entering the sector? In the current gamut of our portfolio, is there any kind of crane that is already, that can enter the sector, or are we looking at a complete new tonnage? If you can throw some light on that.
Yeah. So to answer that, we have sufficient bandwidth within our current fleet of machinery to enter the renewable energy sector, but we would need to add, when required, more machinery because of the already occupied state of current machinery, if that be. So it is not that we don't have the machines to enter the renewable energy sector, if that's the question. We have sufficient bandwidth there, but the tonnage usually is higher capacity crawler cranes and also a mix of lower capacity tire mounted cranes, which are used for in the sector specifically.
Okay, understood. Just the last question is to follow up. In compared to the infra sector and compared to metal, cement, and let's say petrochemicals, is there a lot of difference in the yield, or it's very similar all across the board?
There are certain differences, but it all depends project to project and client to client. The duration of the project, it's very variable, so difficult to give a very specific answer to that.
Okay, understood. Thank you so much, and I wish you all the best.
Thank you.
Thank you. Next question is from the line of Dipen Vakil from Incred Equities. Please go ahead.
So my first question is on the line of, I wanted to understand a little bit about your new order wins. So, and what is the usual execution period for your new order wins?
Okay. So in our two primary segments, one is the warehousing and logistics segment. There the order wins are usually, the execution period is usually 5 years to 7 years, as the tenders and the contracts tend to be on the long-term tenures. With regards to our equipment rental business, there it can range from anywhere between 6 months to even 3 years, depending on projects. The clients usually give out orders in the range of 6 months to 1 year, and then they are further extendable by every 6 months or 3 month basis, based on the kind of project and the kind of industry we are working with.
So I wanted to understand what are the new order wins that you're expecting in going ahead, because our current order book of 138 crores, I believe, would be exhausted, at least a part of it will be exhausted much before the financial year end. So what would be the kind of order pipeline that you would be looking at? And that takes me to what would be the growth that you would be forecasting for FY25?
Okay. So to answer that, sir, first I'll just correct one statement that I made in the earlier question to Ms. Dolly. I think the order book as of today of 138 crores, the percentage share of our warehousing and logistics is 55%, which I incorrectly read as 70%. So it's 55%, and the balance 45% is from equipment rentals. With regards to your question on the pipeline in play, so that because Q3 and Q4 tends to be the best sectors for our equipment rental segment, there we do see a surge in demand and new orders coming in during that period. As for the growth, we have set ourselves the aggressive target of 30% Y-on-Y growth this year, so we do see ourselves achieving that.
And do we expect to sustain the higher EBITDA margin of close to around 35%?
We have increased the EBITDA to 33%, and going forward, our efforts are definitely on to ensure that better EBITDA margins are in place, but definitely our target would be to at least sustain this, if not increase. Yeah.
Great, sir. Congratulations on a great set of numbers for FY24, and all the best for the time going ahead.
Thanks a lot. Thank you.
Thank you. Next question is from the line of Hitesh Gotani, an individual investor. Please go ahead.
Hello, am I audible?
Yes.
Yes, please.
Hi, sir. Thank you so much for the opportunity, and first of all, congratulations on great set of execution. I would like to understand what is going to be the timeline for this 160 crore capex. Do we have anything concrete with the clients? Have you placed the orders? How is it going?
Okay, so thank you for the question. The timeline, as I said earlier, is to spread it across this financial year and the next one. For specific orders, we cannot give out details because those are business strategies. But yes, we do have certain orders lined up. Some of the capex will be done in the first half of this year itself, and that will become more clear once the details are out.
Okay. And what amount can we expect going forward as a depreciation cost, because it has come down significantly in the Q4?
I'm sorry, I didn't understand the question.
So in Q4, the depreciation amount has come down significantly if we compare it to previous quarters. So is it going to be the same like it has in Q4?
Yes, yeah, it should remain similar to what you've seen in Q4, but with the addition of new equipment, that depreciation of the new equipment will definitely lead to certain change on that. but you can do your math accordingly, and it'll be difficult to give you a depreciation number as of now, but the Q4 numbers are indicative of what you would see going forward.
Completely understood. And we are doing something